Have you ever come across a business for sale and the seller claims there's extra cash that they're not reporting on their tax returns? You might be tempted to jump at the chance to own a business that's earning more than what's on paper. But is it really a good idea? In today's video, we'll discover hidden gems in buying a business with unreported cash, what you need to watch out for, and how you can turn that unreported income into instant equity. Stick around because this information can save you a lot of money and stress from buying the wrong business and overpaying for that business. First, let's talk about why unreported cash exists in some businesses. Many cash-heavy businesses like restaurants have unreported cash, and they do that to avoid taxes. It's not uncommon for sellers to mention that they make more than what's really on the books. But here's the thing, banks don't care about unreported cash. When it comes to financing, only reported earnings matter, in other words, tax returns. This can be frustrating, but it also presents an opportunity for smart buyers. Today, I'll show you how to handle the situation. Now, here's the most important rule when buying a business. Always base your offer on the reported earnings. Let's say you're looking at a restaurant where the seller claims they're making $100,000 annually, but only $70,000 is reported on the tax returns. Do you just ignore the extra $30,000? Yes, absolutely. Why? Because it's not guaranteed. You should only pay based on the income that they can prove on the financial statements and the tax returns. Using a 3x multiple of earnings for restaurants in this example, your offer would be $210,000, 3 times the $70,000 of reported earnings. I know it might seem like you're missing out by ignoring the extra $30,000, but here are 2 reasons why this approach is crucial. First, the unreported cash is not guaranteed. Sellers could be inflating that figure. Second, once you buy the business, you can operate it above board and claim the income. You can't rely on hidden income. You'll only want to make sure that you operate the business reliably and legally from that point forward. So it's better to pay only for what's on paper or the tax returns and use the extra cash as potential future growth. Here's the hidden gem. Once you own the business, you start reporting all of the income. Let's go back to that restaurant example. After you take over, let's say it really was earning $100,000 and all of that income is now reported on the tax returns. The business is now worth more on paper. If the earnings multiplier is still 3, the value of the business jumps to $300,000. So by reporting that extra $30,000, you've increased the value by $90,000 in equity. That's instant equity for you, and it's completely legal, really the way it should have been done to begin with. Because banks won't finance unreported cash, many sellers will have to offer seller financing. This is where a seller lends on a portion of the purchase price, which you pay back over time. If the business costs $210,000, you might pay $60,000 up front and finance the remaining $150,000 with the seller. This structure helps you pay for the business's actual worth while keeping your out-of-pocket expenses manageable. To sum it up, when buying a business with unreported cash, focus on the reported income. Stick to a multiple of documented earnings to avoid overpaying. Unreported cash can be a hidden gem, offering you instant equity if you buy it right. Don't forget, negotiating seller financing can also help make the deal more affordable. If you're considering buying a business with unreported cash, the strategy will help protect you and set you up for long-term success. If you're considering selling a business, start getting all of the income on the tax returns. That is how you get the highest valuation. If you have time, get all of that on the tax returns for 3 years. If you're looking at selling your business and wondering how much it might be worth, reach out to me. Let's set up a time to talk. I have a free business valuation where I can go through and determine the fair market value as well as calculate how long it will take to sell your business. And here's the best part. There's no obligation or commitment on your part. My success hinges on delivering what I say, so there's absolutely 0 risk. I only get paid if and when I sell your business. So use the link in the description and let's set up a time to see how much I can sell your business for.